this lesson, I will be discussing leverage. So as a newbie, you're probably wondering how a retail trader like yourself, like myself, right, with small accounts, whether it is 500 Rand, 1,000 Rand, 10,000 Rand, whatever you consider small, right? So whatever amount of capital will be able to make a lot of money in trading. This is thanks to leverage as well as lot sizes, but we're on leverage now. Okay. So in the beginning, I spoke, about brokers and how important they are. So think of your broker as a bank that borrows you $100,000. Okay, not actual money that you can see. Okay, it's just for you to have an impact on the market. Okay, to buy currencies. Now, in return, they are just asking you, as a retail trader, for a good faith deposit of, let's say, $1,000 or $100, which they will hold for you, but they don't necessarily keep it. So that's your deposit that you deposit in your trading account. You get different amounts of leverage, and this depends on your broker and what you are comfortable using. Any losses or gains will be deducted or added to the remaining cash balance in your account. So you as a trader are able to invest a small amount of money and trade much larger lot sizes because of leverage. Leverage is useful because movements in the currency markets are really small. I mean, like I said, a 1 Rand move is huge. It's 10,000 pips, okay? But if you're looking at it, it's actually small. A 1 Rand move is a 1 Rand move. Leverage amplifies both profits and losses alike. So using leverage, you can make a lot of money, but you can also lose a lot of money. There's different amounts of leverages. 1 to 50, 1 to 100, 1 to 500, 1 to 1,000, 1 to 3,000, just depending on what broker you're using, what regulations do they follow, etc. So when you open a trading account and you can choose, whatever leverage your brokerage firm is offering you. So let's use a simple example of a 1 to 100. This means for every dollar that you are depositing into your trading account, your broker technically is borrowing you 100 times that dollar. Okay. Here's an example. So let's say there's a crisis that happens in Europe. So you expect Euro USD to drop. So you want to place a sell. Here's the example, right? So let's say you place a sell at 1.3800. And as you can see, price crashed down and you made profits and you close it at 1.3108, which is lower than 1.3800. All right, let's see. Here's an example of having a small leverage compared to a big leverage using that example I just gave of Euro USD. So let's take a small leverage of 1 to 50. Okay, you open a position on Euro USD using a lot size of 1. Okay, I'm just using a lot size of 1 just for an example. It's easier. So if you use a lot size of 1.00, okay, if you don't remember lot sizes, please go back to the previous section under lot sizes. This requires initial deposit, okay, of $2,760. How did I get $2,760? Remember, for a standard lot size, it is 100,000 units of the base currency. Now, base currency in this example is Euro. Okay, so it's Euro USD, this example. The base currency is always on the left, Euro. So it's the unit of the base currency. Because we're using a standard lot size, it's 100,000 units of the base currency. So it is 100,000 euros. Okay, so you take that. If you use the 0.10, it would be 10,000 euros. If you use the 0.01, it would be 1,000 euro. Okay, but in this example, we're using a lot size of 1. So it's 100,000 units. Times the price of which we entered at. Remember that graph, we've entered at 1.3800. So it's 100,000 units times the entry price, 1.388, divided by the leverage. Remember, the leverage is 1 to 50, so we use it 50. Okay, so it's the units times the entry price divided by the leverage. So it's 100,000 times 1.3800 divided by 50 gives you $2,760. So you need $2,760 in your account to place a lot size of 1 on this pair using a leverage of 1 to 50. Right, which is a lot of money. Okay, times it by whatever it is now, by 15 Rand, I think it is. Your prediction was correct. Okay, euro fell against the dollar, moved to 3,108, and you close the trade in profits. So the result was you made 692 pips. Okay, that's a lot of pips. This is just an example. How did you get the pips? You minus your entry from where you closed. So you minus 1.3800 from 1.3109 gives you 692. 692 times your lot size times your leverage gives you $34,600 profit. So with an initial investment of $2,760, you've made 34,600 Rand. Sorry, $34,600 on this trade. Okay, remember, you're not necessarily going to make 692 pips on one currency pair. You can on NASDAQ, but not on a currency pair, unless you're a positional trader. Okay, but it's just an example. So can you see how much you've made with using a leverage of 1 to 50? Same example. Let's see now if we were to use a bigger leverage of 1 to 200. So you open the same cell, okay, same lot size of 1. Your initial deposit now is $690, not $2,760, so it's less. How? 100,000 units, so 100,000 euros, times entry price, 1.3800, divided by 200, because now your leverage is 200, it's not 50. Gives you $690 as initial deposit. So, prediction was correct. You made the 692 pips. So, 692 times lot size of 1 times 200 leverage gives you $138,400. So with a smaller initial investment of $690, you made more profit, $138,400. Can you see the difference between the leverages? Now, just because you can make a lot on bigger leverages doesn't mean you should now go for bigger leverages, because remember, you can lose a lot as well. Okay, so I use a leverage of 1 to 500. That's my average leverage that I use. When you open an account, okay, that's when you pick a leverage and you stay with that leverage. If you want to change your leverage, you have to open a completely new account. Okay, that account will stay with that leverage forever. The bigger the leverage, the less capital is required to insert a bigger lot size. So if you have a bigger leverage, you need less money to open bigger lot sizes to make more money, but you can also lose more money. Formula for leverage. So an example, again, standard lot size of 1 with a leverage of 1 to 100. Okay, remember, standard lot size of 1 equals 100,000 units of the base currency. So if it was USD JPY, okay, and we use a lot size of 1, that is 100,000 USD. Okay. So 100,000 units for one lot, standard lot size. 100,000 units divided by your leverage 100 gives you $1,000. This means if you're using a 1 to 100 and you want to place a lot size of 1, it means for every $1,000 in your trading account, you can open a lot size of 1 using that leverage of 1 to 100. So if you have a $5,000 account and you open that account with a leverage of 1 to 100 and you want to use a lot size of 1, you can use a lot size up to 5. So 5.00 or 5 trades with a lot size of 1.00, if that makes sense. Okay. Another example, using a leverage of 1 to 500. So not 1 to 100, 1 to 500. So lot size 1, 100,000 units of the base currency. Okay, 100,000 now, instead of divided by 100, it is divided by 500. So your leverage is bigger. This equals to $200. So with a bigger leverage, this means now instead of 1,000, so every $200 in your account, you are able now to open a trade with a lot size of 1, using a leverage of 1 to 500.